So I thought I'd make part 4 of this video, clean all this down and explain what I mean by, you know, the difference between candlesticks and swings. So we get rid of all these lines on here, and we'll quickly go over this one, and then I'll do something else. So objects list, get rid of all that lot. So I was talking about the vague difference between swing levels of resistance as you're going down on the swing trend to the actual, what I consider to be precise levels, being the candlestick highs. So, you know, when I was taught or shown how price moves up a set of stairs, I could reduce the size of this, I suppose, and go another time frame. Down even more. And that's the internal swings of that that monthly reversal. So we used to just draw levels on the highs of any resistance that may be above us. That's true resistance because it's forced the price down. That's quite important. Took me quite a long time to get that notion in my head. So that's all of the levels that the price needs to go through as it trends upwards. So you start singing the song and it's making lower highs, and it's using the levels here as support here, and continues on up. Nearly tests that old resistance there, but doesn't, and comes back down, finally breaks through this level here, and continues up. Now the thing is, what I could never get my head around is, how do I know when this is broken? How do I truly know? You know, you've got a break and close, a break and close, break and close. We just had to use a set of indicators, not this particular one, and try and work out the best way to get into the trade. In fact, it was moving average crossovers, so you sort of had a white and a yellow moving average, and when the white crossed over the faster one, crossed over the slower one, then you could consider that to be good to go, with a couple of nondescript indicators down here, and it was very hit and miss in my opinion. And so I needed to work out a way to get these levels precise, and in my opinion the easiest way was to look at the monthly chart. It doesn't have to be the monthly, you could be looking at the 4 hour and trading on the 5 minute or something like that, but I'm using the monthly as a good example. Well, as an example, I didn't cherry pick it. So here we are again with all these sort of vaguish levels. So now what I can do categorically, we'll change the colour. In fact, we've got the colour yellow, and put that on the highs of every one of those monthly candles. Now, this sort of eureka moment was come across, as I've mentioned in various previous videos, by studying how the 2B reversal used pip precise levels to actually operate properly, and that was it really. So now we can go back to that daily chart, zoom out again, there's the internals again, and we can clearly see there are some discrepancies with the precise levels of support and resistance. That's a monthly high, that's a monthly high, there's a monthly high up there. So we can get rid of all the green levels now. Well, I'll just get rid of the obvious ones here, because I'm going to start ending up having a problem clicking on the right ones there. Get rid of that one. Oh, we'll get rid of that one, I can, I'm sure. Yeah. So now we've got the precise levels in there. We're getting a little bit more useful information. Not sure why that one's there. Oh, it wasn't actually a monthly high, was it? That's why it's not there. So go back to the monthly chart, because it has to be the monthly chart. It has to be the chart you draw your levels on in order to derive the valid reversal on. So now I know categorically when price breaks one of these monthly highs and closes above it, I'm good to go to the north side, and it will attack potentially the next monthly high, and so on and so forth. And that's what I considered to be a genuine, that's why I put importance rather on these levels, and a genuine reversal. And it's black and white, or green and red if you want to call it that. There's no grey. It takes out the ambiguity of those levels, and that's it. As simple as that, guys. So when I'm here, I know when that level is broken by a monthly candles close, I'm highly likely to continue, and I know when that low is closed below, I'm highly likely to continue. There's no ambiguity. It could still reverse, of course, but those reversals are arrived upon with the exact same method. So in my opinion, that's as mechanical as you can possibly get. You know, there's a reversal here, we can clearly see it. High, low, lower high, lower low, low high, higher low, higher high, higher low, higher high, and close. Ideally you'd wanted it to have closed above there, because that's going to present a problem with any movement of price upwards. So we can clearly see that level's broken above, and has it closed above the other one? If it has, this would be an absolute slam dunk. It did. You can't quite see it behind my what's it's there, but you can clearly see the open was higher. That was a no-brainer. Long. Put the house on it, and all you have to look for then for the potential problem area above us is the left hand side. Anyone that trades support and resistance and trend analysis will always tell you to look on the left hand side, which we can't. Oh yes, we can. I thought there wasn't, perhaps not enough data. So on the left hand side, not only did this break that resistance, which would have been a real pain in the backside to have above us, but there's probably 200, 300, 400 pip gaps between these, especially on a chart that moves like this CAD does. So next level of potential problem area would be the high of that red candle there. So we can put a level on there. Notice how this lends itself to absolute precision. And this wasn't cherry picked, guys. That's the close. That's the level it had to close above. Where's the next level it's got to get to break out in order for the price to actually just keep pushing up? Yes, you guessed it. That high there. And lo and behold, what does it do? And then what's higher above that? Oops, went on the green one. That's the wrong one. I do apologise. It's a bit difficult. My mouse is not the best in the world. There's your extreme, and You know, you do have to take into account support levels above us. That's why when you see my charts, you've got lines everywhere. But once you get used to doing this and you see the price move between the levels, I promise you, you will never look back. So that little reversal to the long side there, absolutely textbook, done what I preach, as it were, my method. And it's given us a massive gap. Remember, I've mentioned, if you watch some of my other videos, and I implore you to do so, and I do make bespoke videos, if there's anything in this you don't understand, ask on the comments section and I will try to clarify it for you. This here is what I draw these lines on for, to find a gap like this. And then you don't have to just hit it and wait. Whoops, my mouse, I'm gonna kill it. That gap there, well, oh, for God's sake, sorry guys, that gap there, 1,000 pips, give or take. The you don't have to just hit it and wait. You could trade this on the 1 minute. You've got your target, and every time you get a pullback and a valid signal on your histogram, talked about that in previous videos, so I'm not going to repeat it in this one, then you hit it. And that's how price action, using the highs and lows of candles, depending on which way you're trading, up or down, that's how I get my precise breakout levels. And to my knowledge, I don't know anyone else that does this. The fact that you can't find this little script here that snaps to the top and bottom of candles suggests that not a huge amount of people have done it. I'm not prepared to share this script just on a open forum, as it were, but go to a website like Fiverr or the MQL5 community and ask someone to build you one. I'm sure it won't cost an awful lot of money, a few dollars. So guys, I hope that's clarified what I do with candlestick highs compared to swings, and the ambiguity of the swings compared to candles. And watch my other videos for more stuff about the candle reversals. And then you not only do stop at this, I've mentioned it in this one, but you don't enter just on the strength of that. You can enter using the lower time frames to wait for a pullback and then to wait for a valid reversal, even as low as the 1 minute. So I'd watch it on the, on the daily, then I'd be watching it on the weekly, then the daily, then the H4, then the H1, M30, M15, every time frame. You get the gist now, until all the ducks have lined up. And then you can use this as a belt and braces method as well, and that's how you get into that move using the 1 minute chart. Okay, thank you for watching and have a jolly good Sunday.